fairly okay on an otherwise very, very weak day of trade. But let me bring on board Ajay Bagga, market expert, to talk to us about how he's viewing markets. Ajay, at this juncture, IT and the kind of knock that sector has taken, what would you do at this point? Do you go out and buy?
No, I don't think so. Overall, there is no clarity on what Indian IT is going to do about AI. If you look at AI, it is improving by the week, literally. So, what offerings were there a year back are very different from what is being offered today. And people are talking about being able to write a full app, write a full thousands of lines of code in any amount of in a very short period of time with the new offers that these AI majors are bringing in. I was talking to a managing consultant, a management consultant friend of mine who heads a big consultancy in India, and he was giving me an example that they had a client for whom they would bill about 200 hours of work for a particular segment. And he says that work now in 2 hours, artificial intelligence delivers it. My people spend about 8 hours making sure that every line is correct. And then just to be sure, because I have so much margin now, I put in about 10 hours more, dressing it up a little more. But he's saying virtually that 200 hours work has become 2 hours, and it will get better and better. He's saying we can see we were training the AI about a year back. We were teaching it accounts, reading annual reports, modeling. And he says now those AIs come in and they are taking over. You just put in what do you want done, what analysis, and then you leave it that please learn from what other things you are doing. He's saying they bring in so much more perspective. And right now he's spending about another 10 times more time just to be on the safe side, not to make any hallucination kind of mistakes. But he's saying the accuracy has increased multifold. So our IT companies need to bring out use cases, need to bring out application cases that how they will use this. That is unfortunately not coming through. So in that scenario, why should we go out and buy them? We'll wait and watch. It will come
Okay.
eventually, but now is not the time.
Okay, so wait and watch approach on IT. Mr. Bagga, apologies, hold that thought. We need to slip into a very short break. We'll come right back and continue that conversation, so stay tuned.
Arpit Beriwal at this hour from Motilal Oswal Financial Services, of course, alongside Ajay Bagga. Arpit, let me quickly have your view with regard to the moves today that we're seeing. It's such sharp moves, and give us a sense of IT, because that's where the largest gash is.
Very good afternoon to all. So if you talk about the Nifty index first, so definitely I've seen a gross underperformance in the Nifty, mainly due to led by the weakness in the IT index. And if you see the chart structure of Nifty IT, so it is trading at multi-week low. And if you see the long-term chart, so it made around bottom around 30,000 level in the April 2025. But looking at the setup on the daily and the weekly time frame, there is no major pullback. So it's better to avoid. And looking at the setup wise, if it closes below 33,000 spot levels on the Nifty IT index, we can see furthermore weakness of more to 4 to 5% towards 32,000, 31,000 levels. So highly stock specific within the IT index, better to avoid bottom fishing for the timing and wait for any major reversal. Along with that, definitely that would have impact on the Nifty. So if we talk about the Nifty overview, Nifty got stuck between 25,600 to 26,000 again. So stock specific action is likely to continue. Banking index is outperforming. That is likely to help the overall market sentiment wise. So Nifty is underperforming, and at the same time, Bank Nifty is relatively outperforming with major support around 60,500 on the closing basis.
Okay, so those are some levels to watch out. But going with the fundamentals, we still have Mr. Ajay Bagga with us. Mr. Bagga, thanks so much for waiting by so patiently. I want to talk to you about some of the sectors that have seen a lot of traction and then cooled off. Perhaps let's talk about the metal space. What is your view over there, given the kind of rally that happened on the back of these silver prices? You had select stocks that did very well, then they saw sharp correction as well. And now they seem to be doing pretty okay. They're rather stable. What is the outlook on metals?
Yeah, see, we have to differentiate industrial versus precious metals. Precious metals have a lot of tailwinds in terms of central bank buying and the industrial growth on silver. So price action was too strong, too swiftly, and now we are seeing a consolidation, but the fundamentals haven't changed. The demand supply gaps are still very massive, and the de-dollarization, debasement trade, all those trades are very much on. So those will be in a catch-up mode, maybe a quarter down the line after some consolidation. As far as industrial metals go, we must remember there is a huge stimulus coming from Japan. China is already expected to unleash a stimulus post the lunar year holidays, and Europe is seeing some heavy lifting from the German economy with a big deficit. So there is a stimulus around the world. US, of course, the numbers from the CBO are showing that the fiscal deficit actually went up in the first 4 months of the current fiscal year. So the globe is awash in a lot of stimulus. Industrial metals will be beneficiaries. So overall, metal pack positive, precious metals positive, industrial metals very positive.
Okay. All right. So that's the take with regard to metals. Kunal, I wonder whether today is the day you buy IT. I'm trying to get a sense as to whether there's absolutely any positive note where charts is concerned.
Doesn't look like, Harsh. So even at current levels, it's not that the price levels are very attractive, but it's the fact that whether these stocks would bottom out very quickly. I think that's the concern, because today I think is one of those days where you're seeing incessant selling for the IT stocks, and that took continuously. I think throughout the day, it I don't remember the last time. I think it's names like Infosys and TCS opened with a gap down of 4%, and they continue to trade with a negative bias. So I think in that context, yes, these IT stocks are going through one of the peak selling, but I would just wait for a confirmation of a turnaround rather than anticipating or maybe catching the falling knife over here.
Interesting. Let me take very quickly take you through Bharat Forge's numbers. They came out with a good set of numbers. By the way, this is courtesy Karan Joshi, who's our defense analyst. But I'll quickly read out the numbers and his take with regard to those numbers. 25% growth on the top line was is very, very strong beat versus the estimates. 4,340 crore is where the top line number came in at versus the 3,800 crore number that was anticipated. 750 crore EBITDA number versus 710 crore anticipated. Margins came in at 17.3%. Therefore, you've seen very, very strong, very strong kind of the tailwind to the business seems extremely strong. Profit is up 28% YOY. The order book too sized up very well for itself. 2,400 crore was new order wins in Q3 of this year itself, and the defense order book now stands at 11,130 crore. So very, very strong tailwind where defense is concerned. I wonder, Arpit, whether Bharat Forge on charts looks attractive at all.
So if you see overall the auto ancillary business, the stocks are relatively outperforming. And if you look at technically the chart set above Bharat Forge, a very strong rally we have seen in last couple of days on the weekly time frame. Definitely it has given a range breakout above 1500 levels, and then we have seen a rally towards 1740, 1750 levels. So it's just a couple of percentage away from its life height address. But looking at setup on the monthly setup, definitely once it closes above 1800, the stock can head towards 2000 positionally with a 2 to 3 months time frame in view. So setup wise, it's positive. It would be kind of a buy on dip counter. Some minor dip near 1700, 1710 could be re-enter with major support around 1620 for an upside move towards 1800 and then 2000 levels positioning.
Okay. The other one which also came out with numbers was an Natco Pharma. Revenue was up 36% YOY. Profitability up again 14% YOY. Some one-offs in those numbers. EBITDA also jumped very, very well from that sub 40 crore number, very low base. It came in at around 160 crore, so 4x jump where EBITDA is concerned. Margins also up from 8% to 24.5%. But of course, the stock sulking after that initial traction that it saw in trade. So Natco Pharma again, doing fairly okay in terms of the numbers for Q3. it at least looks like an inline set overall. HAL, of course, was the other one where numbers came out. Again, a good, decent set. PAT was a beat, but revenue and EBITDA were largely in line with estimates. PAT came in at 1,867 crore, which is up 30% YOY versus the 1,762 crore number, which was penciled in. EBITDA margins at 24.3%, ever so solid. Ajay, I wonder if any of the defense names are something that you're tracking closely and something that's looking interesting at this point. We've seen a bit of a correction on some of these names, like an HAL. Do they look interesting at all, given the kind of decadal order books that they have?
Yeah, absolutely. On a 3-year basis, they remain a buy. And then within the year, you should hear Kunal Bothra and act according to his advice. You see these cycles, 2-3 months of up move, then you see a sell-off. Again, there is consolidation. Again, they start moving on some new orders. But what's the mega trend? If you cut out the noise, we are going to spend a lot of on defense. We are becoming a major exporter of defense equipment. Worldwide, there is a huge need for defense equipment, and the reserves have got really worn down. So there is a need for replenishment. If our companies can deliver, there is a golden opportunity. Valuations become an issue time to time, and we see some profit booking coming in. But on a 3-year basis, 5-year basis, you can't go wrong on the defense companies.
On defense, but we'll take your advice, Ajay. We'll go across to Kunal, take a view from its view with regard to M&M on charts. Arpit, how does this one look?
If you see overall the auto index, if you look at the charts specific of M&M, so broadly it is trading in a range between 3,300 to 3,800, 3,900 levels on the weekly and the monthly time frame. So in the last few days, we've seen good recovery from the lower levels from 3,300 to almost 3,700 levels. So looking at the position setup, the setup is quite strong with major support around 3,300, 3,400 levels. On the upside, 3,800 is a major resistance zone. So overall, it's a kind of a buy and dip counter where 3,400 is a major support zone. So that would be a good favorable entry point. And the upside, 3,800, 3,900 is a hurdle zone. So it's kind of a trading counter within this band. Overall bias would be positive with a medium term to long term positional setup.
Okay, so overall bias positive. Ajay, let me come to you. Auto sector has been, in fact, the darling since August of 2025, and we've seen very good traction. A new profit pool emerging within auto, the GST benefit trickling through, and within consumer discretionary, while other things haven't done as well, auto has been phenomenal in terms of the numbers that they've been posting. Question one, is there more upside left, or have we largely now, are we at fair value where auto is concerned? Point number two, where else is the profit pool likely to emerge from?
Auto, lot of tailwinds. Rural demand has been strong, continues to be strong. You're seeing that in tractors, two-wheelers. Secondly, the GST cut has been a big beneficiary, and that continues. Third, export markets emerging. You have seen the huge orders from Indonesia for 2 auto majors. Those kind of export markets are very much there, and some relief from the Indo-US trade deal as well, expected on the auto parts side. So overall, auto sector remains a buy, and it's looking good even for the next couple of years. A lot of tailwinds in it, and it's reflecting the consumption story. Urban consumption still not so strong, and you're seeing that in the FMCG disappointment we have seen across MNC majors. But auto is well positioned, well financed as well in terms of the customer having to pay, looking at auto ownership in terms of an EMI rather than putting down the entire amount. So those well-oiled machines on the finance side are really allowing auto to go up. And if you compare it to China, there is a massive, massive growth still lined up on a similar population. Of course, qualitatively and financially a different population, but that population will be in a catch-up mode, and autos will be a natural beneficiary.
Kunal, some of the buzzers of the day, and let me try and pull out some of those names. Okay, I'll do that in just a minute. Let's pull up something like a Divi's Labs. Let's pull up a V2 Retail, a Godrej Agro, a Hudco, a Finolex. Just some of the big movers. Talk to us. This move on Divi's at 3.5% lower. Does it change anything substantially on charts? Because we've seen Divi's be range bound for a very long period of time now. What do charts indicate? What should one expect?
See, I think what had happened was yesterday when the stock, in the last half an hour, last 1 hour, when the stock had moved up towards 6,700, 800 mark in a very sharp kind of a trade on the upside, the indicators had gone to a deep overbought territory. In fact, at one point of time, the hourly chart, Bollinger Band had come back, the stock price had come back about 3.5 to 4 standard deviation Bollinger Band. And that's why I think you're seeing today's retracement of sorts. In fact, after today's first say couple of hours of sharp candlestick pattern on the downside for DV slab, it's not seen a major follow through. So you look at the last 2 hours of candle for DV slab, the stock has largely been into a range at 6,140 on the downside and 6,220 thereabouts on the upside. So it's a very tight range of 1% after the kind of intraday first phase of correction. So that tells you that potentially the stock should make a bounce back on the higher side. I would expect the stock to take support at 6,100 levels. So maybe that could be kept as a near-term stop loss for someone who's looking at a buy on DV slab at current levels with a potential target towards 6,300 to 400 zone.
Okay. Ajay, Arpit, been a pleasure having both of you on the panel today. Of course, we were stretched for time, management interviews, but thank you so much for coming in and giving us that perspective. And, minute and a half